I've been uneasy about the crypto space for a while, and even though we've seen great price action from Bitcoin, Ethereum, Solana for sure, Near, like there's been some good performers out there. When I looked at the broader crypto space, you had heavy hitters like Cardano, XRP, Polkadot, Cosmos Atom, like they just weren't able to gain any traction. They're just treading water. Like these are significant crypto assets that when this bull run takes off, they're going to get traction. You're going to see a lot of growth. And I think you saw the market just run ahead of itself a little bit due to these, ETFs being approved. It's a big historic event, bringing new money and interest to the space, but I don't think we're quite there yet. We got this interview here with the CEO from Marathon, one of the big crypto miners out there, and he's going to give us his outlook and the drivers of value and when we should get bullish again for the crypto market. We'll hear what he has to say here.
Sense here. I mean, I know there was a lot of discussion coming out of that halving in April that, we would see new highs. I know that didn't quite transpire here, but we're still looking at Bitcoin, at least if you want to use that as the proxy, the barometer here, is still kind of holding the line here. So we're not talking about a drop as much as we're just talking about a plateau.
Yeah, I think Bitcoin is trading sideways. There's no real macro news that's going to drive Bitcoin price up at the moment. Everybody is waiting for Jay Powell to essentially, announce the first interest rate decrease. People are hoping that that'll hopefully happen after the Wyoming event. We'll have to see. Other than that, we're seeing some noise in the market regarding the Mt. Gox distribution. Mt. Gox was a crypto exchange that was hacked, and many years ago in Japan, actually, it was one of the leading exchanges at the time. It was sort of the Binance of its day. And that bankruptcy and the Bitcoin that was held are about to be distributed now after many years. That's about $9 billion worth of Bitcoin. So there's been a bit of a supply shock rumor. We saw Bitcoin price drop down to its support level, which is around 57,000 the other day, and then bounce quickly right back up. There's still a lot of buyers out there. There's
So for the Mt. Gox situation, it's not trivial. I mean, it's $9 billion worth of Bitcoin. We've talked about this in previous videos, though. Those claims have traded hands. I don't think all of that Bitcoin is going to come, ripping onto the market. But it kind of is a counterbalance in some ways to, the supply cut due to the halvening. Now, the thing is, it's just a temporary, increase in supply. All of that Bitcoin will get absorbed where the halvening is permanent, right? We're only going to get less and less Bitcoin over time. And that, event usually takes time to really show an effect. Usually you pass the halvening, everyone's front ran that event, and we're sitting around going, okay, what now? That's kind of par for the course, so not surprising at all. And then we're looking out to when does the Federal Reserve officially pivot and start bringing those rates down. I do caution people that historically that moment isn't always bullish. Sometimes it kind of shows when things are going to go off the cliff. We'll have to see if they nail this landing, if we get the so-called soft landing we've been looking for, or if this will be more what the numbers typically show, where you get some disruption as you come out of that tightening cycle. Who's to say? We'll see it play out. But all things we got to watch here as we navigate the coming months.
no real movement in the market.
Well, I'm glad you point that out, because I am curious as to what you think sort of the next potential catalyst could be that could move it, whether it's up or down here. There's been a lot of discussion here about economic conditions, obviously a lot of concerns about the fiscal deficit, and now you have at least one of the major presidential candidates making this a campaign issue.
Yeah, clearly Bitcoin has become an issue in the political campaigns. I interviewed Ted Cruz yesterday at the Mining Disrupt conference here in Miami. And, it's clearly on the Republican agenda. The presidential candidate on the Republican side, former President Trump, is obviously, taking donations, contributions in Bitcoin, and also very pro-Bitcoin. There's a stance about Bitcoin being important for national security, that all Bitcoin mining should be done in the U.S. And so I think what we're seeing in the marketplace is generally a more positive wind from both sides regarding Bitcoin. I think the Biden administration, which essentially had been at war with crypto and Bitcoin after the FTX debacle, has started to kind of soften their stance a little bit, because there are 55 million voters out there who believe in crypto and Bitcoin, and that's a very big voting bloc. Outside of the election, the economy. Really, you have a correlation with Bitcoin and risk-on assets. And as we're starting to see in the market now, things are cooling down a little bit. We're starting to see some slowdown in growth. Risk-on assets are sort of becoming a little bit less popular outside of some of the key trendsetters, on the tech side. But I think what we'll see is Bitcoin will trade sideways for a while here, waiting for a catalyst. The next catalyst is likely going to be an interest rate drop. If you look at historical cycles, you would expect Bitcoin to start moving up here towards the end of this year, have kind of a double top, as it's traditionally called, go down in the early part of next year, and then run up through the end of next year to kind of a 2x where it is today. We'll have to see. History isn't always a predictor of the future. But what we are seeing is a lot of interest from institutional investors. The ETFs really are predominantly a retail product today, but we're seeing a lot of institutions evaluating it. You're seeing pension funds evaluating, insurance companies, and sovereigns are beginning to accumulate it. So I think there's only upside.
A couple big things here. First and foremost, his vision kind of aligns with what I've been saying, kind of aiming for fourth quarter. Now, he's a little more detailed. I wouldn't get that detailed on how things will play out. There will always be wrinkles and things like that, but that's kind of how I see it playing out. And I think what we're looking for is not just the Fed pivot, but how are we looking? Do we nail that landing? Are we able to start easing off without, inflation roaring back up again? Do we run into any problems? Does anything break before we start kind of taking the pressure off the economy? That's kind of what I'm looking for. How do we come out of this tightening cycle? And does it seem like things are smooth and we're up and running? Or do we have some issues? To me, that's the biggest thing, really the traditional financial space. Are there any problems there? And then, it is a huge catalyst where you see within politics, this really is a central idea here. And I've noticed a lot of people, even though the Biden regime has been less confrontational currently in the recent past, a lot of them are hesitant because they're like, all right, once we get by this election, would they just pivot back and start attacking us again? I mean, that's a huge risk, especially if the Elizabeth Warrens and people like this still are in a place of power, and your Gary Gensler stuff of that nature. We didn't see, I don't believe, crypto come up in the debates. I think if you are on either side, you want to get a little closer to election day before you start spouting off too much about crypto, because we could have a huge downturn here in the market, and crypto moves quickly. I think there's a little bit of risk there. You don't want to get tied too closely to that until, again, you're very close to election day. Then I think you will see a lot more kind of swirling around this issue and candidates really getting behind the crypto space. That's coming. You might not have seen a whole lot of it yet in the first debate and all that, but I think it's on the horizon. And then now we're seeing these ETFs, and it hasn't really started where you're seeing a lot of these pension funds and endowment funds and major investors start to roll in a big way. But that's going to happen. We're going to start seeing more of that big money flow into this space. It'll start with the Bitcoin ETF, and of course, Ethereum's next on deck. It's going to roll off to the broader crypto market here in short order. It won't be too long. And that's a totally different world from what we've seen. We're talking about some big money now, even if it is just a small fraction of their overall portfolio.
At that point, how much do you think that pension funds, et cetera, are going to be accumulating? Are we talking like 10% of portfolio, 5%, 2%? Because we don't know that answer yet. And that's sort of the catalyst that everyone's pointing to, particularly when the ETF was finally approved by the SEC.
So I've had conversations with some state pension funds, as well as very large groups of wealth advisors. And the general belief, where I thought it was going to be around 1% or, maybe somewhere 50 basis points, I'm being told 2 to 3%, which is a pretty large number when you put it into the context of the amount of capital that's on the wealth side, wealth management side, and on the pension side. So, the risk-adjusted return of Bitcoin over a historical period is very attractive for these funds and investors. And I think now that it's been legitimized, we're going to start seeing slowly but surely more and more. One other bit of news that I think it's important to note is most of the big wirehouses still have not approved marketing of the ETF to their clients. When that happens, and it is in the process of being done, I've been told somewhere between 2 to 6 months from now, that will start a flood of large kind of retail investors. Again, the wealth management clients coming in.
When you
And that's a big deal. So yes, these products have been approved, but they're not starting to place client funds into them as of yet. It's going to happen. In terms of what percentage, I think they're not going to jump right to 2%. It'll take some time, but that sounds about right to me over the long haul. We'll probably start out with like a 0.5% of portfolios and work our way up to probably around that 2% range. That sounds about right. And that's an awful lot of money flooding in here over a very short period of time when you're talking about those types of dollars. Even 1% is massive. So we'll see it play out. I don't know if it'll go as high as 3. That sounds a little bit outrageous, but whatever. It's a lot more than it's been, which is 0. So, it's going to be a big flood of capital, a new class of investor, and, more people are starting to understand this space, want exposure to it, and we've seen a lot of the calculations from Fidelity, where having a small percentage of crypto in your portfolio will lower your risk and give you greater returns over the long run. It's almost like the investment you cannot make, and furthermore, a lot of these pension funds, they got to do something. They got to do something because they're in big trouble here. And it's like you're not going to be able to get enough return out of the stock market. They're getting into more riskier assets. I think it makes some sense to allocate, a small portion of your portfolio to the crypto space when it can deliver the returns that it does. And that will lead well beyond just Bitcoin and creep into the altcoin space. You best believe it.
You mentioned the difficulties of the Biden administration. I mean, we did have the Bitcoin ETF approved then. It looks like the Ether ETF will also be approved. What's your pitch to the Biden administration? What's your pitch to Trump's side?
Well, I think, for Trump's side, it's a voting bloc, right? Both sides want these voters, these 55 million voters who are believers in crypto. Both sides want them. You've seen bipartisan work in Congress related to the repeal of SAB 121. You see a lot of effort in Congress that's bipartisan trying to get regulation done. The ETH ETF, I think, was potentially an attempt by the administration to kind of say, hey, we are crypto friendly, as opposed to, an enemy of crypto. The war on crypto, as Elizabeth Warren had declared it, I think is pretty much dead, at least for now, through the election, depending on which candidate wins the election. After the election, who knows? If the Biden campaign comes out on top, it may be back to war on crypto. If the Trump campaign wins, they seem to have stated a position where they are very pro-Bitcoin and believe in Bitcoin mining, and we're obviously very supportive of any stance and any candidate who is supportive of Bitcoin and Bitcoin mining.
All right, Fred.
Everyone's hesitant here, but I don't care who the president is or what the administration is. I don't think you can return to that war on crypto standpoint because it's unpopular. There's not a lot of voters out there that are really like, yeah, go after crypto and you get our vote. Like either you just don't care about the space or you're a crypto enthusiast and this is very important to you. And so I think we'll see government kind of reflect that in their policy. There's a lot being worked on in the background to get some sort of regulatory regime rolled out here. I expect, hopefully that happens next year. There'll be a lot going on, so you never know. Probably have a new tax plan, all sorts of stuff that probably comes first, but, we're getting close. So I don't see us going back to this really hostile regime again where it's just attack crypto at all costs. What's going to be interesting, though, is once we do have regulations, you look at Coinbase right now, there's 250 assets or something like that on that exchange. And I assume Kraken and, all your major U.S. exchanges have some similar basket of assets that they offer to their customers. What I think is going to happen is there's going to be quite a bit of regulatory red tape here where projects will have to spend a lot of money doing those quarterly reports and compliance issues. And so I think we'll see that space in the U.S. compact down to just quite a few, a lower basket of cryptocurrencies. And for those that make the cut, both in terms of ETFs and just allowed to trade on U.S. exchanges, you're going to see a lot more dollars flood into those projects. So I try to think about that in a regulatory environment. What projects are big enough and would be willing to do quarterly reports, to pay all those fees, to comply with U.S. law, but it'd be an awful big market to capture, a growing market with a lot of big money that will start to flow into it. It'll be worth it, but I don't think we'll have 250 coins once you get by that. Of course, as crypto enthusiasts, we can still go out there and do things in a decentralized manner, and there's other ways to trade in some of those other coins, but I don't think on your main U.S. exchanges there's going to be quite so many options, which is kind of a bad thing for us. You know, we don't get a lot of those early coins, some of those emerging coins. Might not be as interesting, but for the ones that do make the cut, man, it could be a lot of capital flooding into those projects. Let me know what you think down below. As always, please like, please subscribe. The revolution will be televised right here on Jungle Link.